Gurmeet Chadha also joins us on the show. Gurmeet, hi, good to be speaking with you. I'm intrigued to get your views on the entire footwear space. Is there anything you like there? Metro Brands just had a very great start to the day. Today was up 12%, to my mind, for no reason. But anything that you see?
So we really don't club it basis different categories. We have a lifestyle portfolio. We are an aspirational economy. We believe that once you are this $3-4 trillion spot and you are moving towards 10 trillion journey, that's when the maximum delta comes in the discretionary spending. So we have travel related plays like Interglobe. We have IRCTC and Investment Universe. We have some of the hotel stocks like Indian Hotels at the upper end and Lemon Tree at the mid affluent end. We have luxury watchmakers like Ethos in the portfolio. Footmakers in particular, Metro, we used to have, but we did some profit booking because of the valuations becoming very, very stretched. So we played in terms of the lifestyle and how the aspirational middle class India is, and playing that rather than just confining ourselves to sub buckets in this category.
Gurmeet, are you also looking at exhibition companies or mall operators as well? Because that is where the aspirational India spends a lot of time.
Completely open to it. Phoenix was one example, but again, Ajay, as you see, the valuation became very, very stretched. So you have to be a little careful here. In fact, now the government has reopened the window for the white goods PLI. Today, so we are tactically took some exposure in some of the consumer durable names, especially the AC makers, with the kind of heat wave we have in the country, whether it was Voltas, whether it was Blue Star. So we are open to that, but I'm more gung-ho on travel and tourism. That looks very, very structural to me. Reason being that, whether you are rich, whether you are middle class or you are at the lower end, everybody has now started earmarking a certain budget towards travel and leisure. It ranges from 10-15% of your discretionary spending. And I think this will be a huge driver, as we embark this journey over the next few years.
That's a fair point. Anecdotally, as well, we have seen that budget allocation over travel getting more and more broad based these days. But are you open also to put in fresh money to work within the railways ecosystem? Because the stocks continue to rally, but should somebody take a fresh bet just ahead of budget? Is that a good tactical trade at all?
I think a lot of good news is in the price. So purely from a budget play, I think it's a very risky strategy. In fact, I would avoid taking short-term views on it because people who are new probably doesn't know 2003 to 7. We saw a similar up move in the infra EPC place, whether it was GMR or Lanco, some of the capital goods name like Punj Lloyds, etc. of the world, and we knew what happened. So once you start, valuing cyclicals like consumer in a bull market, you tend to make a mistake of buying them at very high prices and factoring in all good things. It doesn't mean that all railway stocks are expensive and you should completely stay away from them. I think it's a great 5-10 year story, whether those are wagons, whether especially companies who are getting into now metro coaches. Government recently announced 10,000 non-AC coaches, and we saw a bit of a upsurge today. So it's a huge rally in terms of the entire railway infrastructure getting overhauled. Look at the sheer number of Vande Bharat trains we are going to have over the next 6-7 years. Second is the replacement opportunity of Shatabdi, Rajdhani, Sampark Kranti, when it would be replaced by Vande Bharat coaches. So I think there is a long-term opportunity here, but immediately for the short term, probably a large part of the space looks very, very stretched to me as far as valuations go.
Yeah, no, that's a very sage advice coming in that you can't value cyclicals the way you do consumption and other, broad-based theories because these entities or these sectors have a cycle, and for now, at least in the last few years, we haven't seen a down cycle, but that doesn't mean that it will not come because that's just the nature of some of these sectors. But defense is also one space which has seen massive traction of late, and that's one space which is expected to see increased focus when it comes to budget 2024, which will be out on July 23rd. Let me take it across to my colleague Sumit to get more details as to what we should expect for the defense sector. Sumit?
Well, this time the schemes could be focused more on small companies, small private sector companies. That is one important takeaway that could come in the budget this time. Also, the government is planning to give a big boost to R&D, research and development, when it comes to defense sector, because that is something which is clearly not up to the mark and in which there is a lot of scope. So, keeping that in mind, Make in India, more Make in India schemes can be announced. Also, there can be more relaxation when it comes to export of defense equipment, and there can be a new list when it comes to new weapons and products as far as exports are concerned. If we give a overall picture, Indian government has a target of exports worth 50,000 crore rupees by FY29 when it comes to defense sector. Currently, is 21,000 crore rupees. In the interim budget this time, the budget was for 6 trillion rupees. The overall the defense sector, if we talk about 6 lakh, so there's a lot of scope for increase in the defense budget, and that's going to be announced this time.
Okay, so that's about the defense sector and the overall push which is expected there. But Nuresh, within the defense pack, is there any stock that you would still advise to buy on the charts, or any stocks that you would want to recommend booking profits into?
So the only stock which still looks promising for the fact is Bharat Electronics. One of the larger companies in the defense pack, one of the oldest one, has had a very strong track record across cycles of the PSUs as well. On the exit poll day, the stock was at 320.25 and then saw a very sharp correction. Most of the other names have gone up 15 to 30% higher than the exit poll days. This stock is up to 3%. So it gave a fresh breakout about 320.25 and still looks promising. So out of all the names, this looks interesting. And in terms of booking profit, it's been a tough call in a lot of defense names. The stocks have continued to do well. So the only way one can book profits is to do it in parts because the momentum is way stronger than anyone imagined.
One of the themes, Gurmeet, that people are betting on is they're looking at spaces which is just underperformed and hoping these will come back. And one such space has been insurance as well. Had to go through a lot of those regulatory changes and there was a lot of overhang. Things seems to be stabilizing for now. Would you hazard a bet into insurance?
See, you got to be selective here and probably differentiate between, let's say, a life and a non-life insurer. I think if you see the June data, there are some green shoots. Even somebody like an LIC has had a 30% APE growth. APE is your annualized premium equivalent because a lot of policies are also sold as single premium or where the premiums are upfronted. SDFC Life reported decent set of numbers. The new AP, the fresh business as well as the AP growth was in upwards of 20%. So I think that's something might see a bit of a recovery from because it's been stagnant for a while. Similarly, there could be some movement in NBFCs also. Reason being that the cost of funds eventually will start seeing some breather as the 10-year GSEC is already at 7. Last quarter was 7.18. And a lot of the NBFCs, if you do channel checks, whether those are working capital limits, whether it is LAS, whether it is LAP, a lot of products have seen a spike in the lending rates as deposit growth becomes difficult to chase. So you would see at some maybe a lag of 1 quarter some better numbers from NBFCs. So the quality ones like Bajaj or a Poonawalla or Cholas of the world could see a bit of a movement there. So it makes sense to be a little counter cyclical. But just because this hasn't done well and should catch up, I think that's a risky trade to take.
Gurmeet, how are you analyzing the auto ancillary space? What kind of names have exposure to there?
So I think we are very gung-ho. In fact, a large part of our portfolio has been auto and auto. And the interesting thing now is that in last 4 5 years, there's hardly been any capex on the IC engine auto ancillaries. There's been a lot of news on the EV stories and the ethanol stories, etc. But there's hardly been any capex. Plus, the second largest market, which is Ukraine, has seen a huge supply disruption due to the war. China has completely moved to EV with BYD and other brands. So a lot of the traditional guys like the Samvardhana Sumi, which was the erstwhile Motherson Sumi, the Lumax, we already seen a good movement, Uno Minda and Sandhar of the world. So a lot of companies in tooling, fabrications, forgings may actually start doing well. A lot of them are running at 80-90% capacity. It's something like what happened to traditional energy. Everybody was so focused on wind, solar energy that we forgot the traditional energy guys. And you realize that, so look at, for example, vehicles. Out of 40 lakh cars India sell, 35, 36 lakhs is still the normal petrol and diesel. Only the 10% is your hybrid and and the EV option. So I think there is an opportunity there in the near term, which is 12, 18 months. So we have Sona, we have Sandhar Technologies, we have Uno Minda, we have evaluating Mothers and Sumi, which is Samvardhana Sumi now, and some of the traditional IC engine auto ancillary plays.
So that's a view coming in quite gung-ho as far as the entire auto and auto ancillary space is concerned. In fact, Gurmeet named one of the companies called Sandhar Technologies, and incidentally, we did speak with the management today. Hear out a soundbite as to what they had to tell us earlier.
In terms of explanation, a mechanical lock typically ranges from about 350 rupees to 500 rupees per lock set, while a smart lock goes anywhere from 3,000 rupees to 5,000 rupees plus even beyond. So therefore, with that happening, we could be looking at a revenue from the same product line bringing in anywhere between 8 to 10 times that of revenue as the adoption happens on a mass scale. In our kind of business, I would imagine the optimum margins are about 12.5, 13 odd percent. We are still far away from there, but we see a gradual improvement to those levels as we kind of reduce the continuous capacity expansion and capital expenditure. Now that most of the capital expenditure has been done, we would imagine that margins will continue to grow in the future times.
You have analyzed the business model of Sandhar today. I was talking to the management earlier in the day. Very good growth being guided for the next 12 to 18 months. What about profits? Any idea how well can they do on profitability front?
There's sizable debt reduction, Ajay, on this. Second, they were a single brand, a single product focus a few years back, plus some wrong capital allocation happened. So they were basically making Hero was the only one of the largest, OEMs they were catering to. Now they have TVS, they've added more brands. Also, locks and mirrors were their proprietary products. So they have a more than 50% market share in locks. Now they've actually moved into, industrial cabins, frames. So if you see the best-selling model of TVS, which is Rider, they make the frame for it, right? And they're getting into smart locks, as you heard the management. So if you see currently the keys we use, they are not really smart. They are more like hybrid. You still have to carry the key inside the car. Otherwise, it doesn't work. The pure smart lock is what something like Tesla, where you can operate from a mobile app. So there is a beta testing going on there. They are making a nice EV-ready portfolio, which includes DC-DC charger and few other setup. So I think it's a play on more content, more features per car. So we are pretty positive as far as the long term prospects go for Sandhar.
All right, let's do a chart check as well on some of these names which are buzzing in the auto ancillary space. Nuresh, check out Sona BLV and even Forging for that matter. Both are buzzing in trade right now. These two or any other which you like from Auto Anch?
So Sona is the only one which has actually not given a breakout. If you look at everything under the auto ancillary pack, everything is broken out, whether it's a Gabriel or a Minda or a Minda. The whole range is broken out. Out here, if you look at it, the stock for the last almost 2.5 years, every time it has come back to 680, 700 has got resisted. So it's a huge cup and handle formation in the making. So it's a preemptive buy here. I would expect it to eventually break above 700 and go towards 800, 850 possibly. So a good risk reward here. So the only one left where there is still upside in the auto ancillary pack and the risk reward is in favor. Same with the case, Forgings also has moved up a bit in the near term. And also over the last few months, we've seen the whole forging pack do well. So the trend is still up for the sector, but I would still like Sona out of the whole range.
Point taken. So these are some of the recommendations coming in from the Auto Anch's vertical. In the meantime, not major buzzers in the last few minutes, but there's just continued momentum on some of the gas names. So ONGC as well as GAIL are two stocks which definitely deserve mention. And RCF has actually now piled down gains of 14%, and FACT is also up 8 to 9%. Remember when we started off the show, they were pretty much flat, then they gained around 2 to 4%, and right now the gains are solid with that move coming in on some of these companies. Time now to take it across to Sharad to get the latest from the dealing rooms. Hi Sharad.
Well, yes, in focus is Sadhana Nitrochem, and this small cap stock, what we are gathering from dealers is HNI buying is coming. Now, interestingly, the volumes have picked up 7 times its 20-day average, and the stock has hit its 3-month high levels. Now, almost 10 crore rupee worth of shares are there on delivery also, and interestingly, channel checks are suggesting that the company's new expanded capacities in the PAP segment in Maharashtra is expected to go live soon. Expected that it could come in a week or so. Interestingly, also, Channel Check suggests that the anti-dumping duty on paracetamol drug can be expected going ahead, especially the consultation process are still going on, and post the election the street is expecting this announcement might come. Now, why this is important for the company is because this product is a raw material and this would be positive if this is announced. So overall, Sadhana Nitrochem, what we are gathering from dealers is buying is coming from the HNI segment.
Right. Let's get you some BTST trades as well. Kunal, what are your BTST trades?
So I'll go with two buy calls which I'll mention. The first one is about ONGC. That's a chart which is looking attractive yet again above the 300 levels. So buy with a target of 312. Stop loss now trailed to 291. And Godrej Consumers is the other stock which is confirming a pennant formation breakout about the 1400 1420 mark. So would suggest a buy with 1480 as a target and stop loss at 1400.
Okay, what about you, Naresh? What's the BTST or STBT trade?
So first is a buy on ITC. The stock is trying to make a short-term range breakout, swing highs here. Stop loss at 437, target price of 450 plus. Second is a buy on HDFC Life, a small range breakout here as well. Stop loss at 615, target price of 635.
Point taken. The other focus area of the government perhaps during the Union Budget 2024, which comes out on July 23rd, might be housing. Now, we have heard a lot already from the government on the kind of push that they're doing for affordable housing, but what more should we expect? Let me take it across to my colleague Prakash, who's joining us with more on this story. Hi, Prakash.
Yes, we are learning from our sources that the government is likely to make some big announcement for the housing sector in the upcoming budget. We are given to understand that the special focus would be provided to the affordable housing segment. In fact, the Ministry of Rural Development and the Ministry of Urban Development and Housing Affairs have sent their separate proposal to the Ministry of Finance. We are given to understand that the government is likely to make big allocation under rural and urban housing schemes. As you are aware, that the government has already made an announcement to launch a new housing scheme for urban poor and middle class in the interim budget, but it had not made any financial allocation under this scheme. Along with that, Housing Affairs Ministry and the Ministry of Finance were also working on the modalities which have now been completed. The sources are informing that the government is likely to make big allocation under this scheme, which could be in a range of 50 to 60,000 crore, since this scheme is meant for urban poor and middle class. Therefore, there is a proposal to provide a benefit of interest subvention to the beneficiaries, which could be in a range of 3 to 6%. Sources are also informing that the government is planning to provide financial allocation for construction of additional 3 crore houses across the country. Moving ahead, the sources are also informing that the government is likely to increase the overall financial allocation under PM Awas Yojana Rural by 15 to 20%, which is around 80,000 crore at this point of time. Since various state governments have submitted their separate proposal, and therefore the government is likely to increase the overall allocation under PM Awas Yojana Rural as well.
Right. So that's what my colleague from New Delhi, Prakash, is gathering on budget. But I want to go back on some of the names which are doing well right now. Chemicals, that is a space where increasingly a lot of contra bets are being placed. Gurmeet, have you started nibbling in that completely hated area and ignored for a long time area, or not yet?
Selectively, in fact, PI is not really a pure chemical name, but we have been holding it for long. It's one of the CDMO names in chemical, if I were to say that. Great innovation rate, in a good wealth creator, and had been a little stagnant. It was available at around sub 3,000, close to 3,000 when one of the news came in of its, one of the key drugs patent expiring and a Chinese company setting up facilities. We have Tata Chemical in the portfolio, but that hasn't really done too well since the time we bought it when it was three digit when chemical stocks were hammered. It's a play on soda ash, which is one of the key ingredients for glass, which is an end use product in auto and housing, and then it has an agrochemical portfolio and a specialized portfolio. So we are nibbling into something like Deepak Nitrite. We have RP in our radar. We want to see if there is, the complete inventory destocking has happened, and companies who have backward integration are better positioned in the medium term. But we do not have really a very high meaningful exposure. Couple of stocks with low single digit exposures.
Okay, point taken. Gurmeet, the other big theme that people keep talking about is also the data centers, right? GCCs are coming up, data centers are coming up. Any other stocks that you like, which could be a good way to play the sector?
See, there's a very interesting thing about data centers in India. Highest data centers are in a place where real estate is most expensive, which is Mumbai and Thane largely. Reason is it needs 24 hours power supply. You can't have a downtime if you're using a data center, let's say for housing application or an enterprise application. I think a lot of this will start moving towards more geographies. So one is the real estate side of data centers, which a lot of companies have run up. We don't understand that well, so we avoid it. Second is the companies which will power the data centers because you need power. So we have HBL Power in the portfolio. Stock has done very, very well. They make specialized batteries which has applications in data centers. It has application in specialized defense systems. And another advanced player where you need, continuous power supply. Plus, it's also one of the proxy plays in the covered scheme for railways. So that's something we have in the portfolio. We're looking for more opportunities here, and I agree with you that this could be a huge wealth creator. The complete value chain of data center in the next 3-4 years.
Gurmeet, you are fond of eating out. Do you observe any change in volume numbers in some of the places you are stepping down into, say, Restaurant Brand Asia? All these guys were struggling with volumes. But do you see people going back, flocking back?
They will. As I see, it's a question of see. Also, last couple of quarters, if you see, we had a World Cup. Then we had a. I'm talking about the last year World Cup, not the current one. Then you had a festive season, a very long marriage season, and there were a host of other factors. We like Westlife. Westlife for the reason that the 95% sourcing is domestic, so there's more control over prices as well as the quality because you need to be very consistent here. I think post leadership change, even Jubilance now seems to be sort of making comeback, although there's a lot of competition in a lot of pizza chains and their other food portfolio, whether it is biryani, even Poppies, hasn't done too well. So we have Mrs. Bector and Westlife in the portfolio. Mrs. Bector, of course, has done exceedingly well. Westlife is still, in our view, a little side. And look at Ajay, this thing that if you add all the QSR put together today, all listed QSR, it is less than at which Haldiram is trying to sell the stake. It's all put together like 70,000 crores. So I think it will catch up. I think this entire thing we'll see the existing ones getting more market share and probably some new ones also coming.
Very interesting way to put it. Haldiram is getting a interest at almost 80-90,000 crore. This entire space is available at lower. That's a good way of putting it. By the way, Mrs. Vector is an interesting one because they supply buns and whatnot, and of course a cookie play. So that is something interesting to watch out for. Look at Mrs. Vector now, almost doubled, sitting at a fresh 52-week high. Well, talking of a fresh 52-week high, there's a new 8-month high for ITC coming in. Nuresh, is this almost 470, 480? ITC went down to 400 and has come back today. Is it start of a new trend there?
So looks very promising if we look at the fact that the stock, everything in the sector has done really well over the last few weeks as well as post elections, etc. This stock has been sideways. And if we look at it, once it sustains 440 mark, which is doing today, it could ideally open up a move all the way to 500 level. So positive on the stock, good price action and confirmation today. So buy at current levels for the short term as well as for the little medium term view.
Point taken. Gurmeet, one space which was doing fairly well and created quite a bit of wealth for the investors was MFI, right? Microfinances names had seen, kind of multi-bagger kind of scenario where a lot of these stocks had doubled and tripled quite quickly. Now we understand that there are some issues or at least some, issues cropping up with respect to asset quality, whether it's related to certain areas right now or RBI being a lot more strict in making sure that they're not going all out with respect to their lending, etc. Is it the time to book out of the microfinance names if one is sitting on profits?
A difficult call to make, but whenever regulator has voiced any concerns, whether it is unsecured loans by fintech, we saw action after that. We saw concerns on gold loans and a lot of cash dispersal happening. We saw some action on IFL and few names. So wherever RBI has voiced concern, it is followed up with some action. And also, you see, Ujjivan started it, where they revised the guidance downwards. Today, RBI mentioned that they want MFIs to go a little slow on UP and Bihar in particular. So a lot of companies like Fusion, like Credit Access has a very large portfolio there. So you got to go probably geography-wise, and also there is politics involved whenever there are state elections approaching in terms of loan waivers and all, and that has a broad impact on the overall asset quality. So you could be cautious here, and maybe if you see more dips, go with some who's an industry leader like Credit Access, and if you have that risk appetite. Otherwise, this space for some time, I think you can look at housing finance, you can look at some of the capital marketplace, and maybe some of the banks right now vis-a-vis in financials rather than just bottom fishing here.
So Gurmeet, if I had to corner you and ask you your, top recommendations from the large cap private banks, a PSU bank, and a mid-sized bank, which are the three names you'll give me?
ICICI Bank, State Bank of India, and Federal Bank.
So that was clear and emphatic. But if I had to put a similar question to you, Naresh, which are the stocks you would recommend?
In the private banking space or everything else?
Private banking, one name from PSU, and one mid-sized bank.
So in private banking, it is ICICI Bank because it's been a clear leader. In the mid cap, it is Federal Bank, which continues to break out. And in PSUs going forward, I think SBI could be the leader.
What? It's 2-on-2 for SBI, ICICI Bank, as well as Federal Bank. Kunal, don't make it 3-on-3. Give us a different idea. Or do you think that these three names are really strong?
Yeah, these three names are strong, so I think you'll have to go with the...
What a consensus build-up it is, right? 3-on-3 with respect to all the three names. So, I mean, I don't know if it could be more convincing than this, right? But clearly, ICICI Bank, to be honest, has done better than its peers in terms of the performance.
Performance as well as numbers.
The point with charts is it's more consistent. It's not pertaining to any kind of a news flow. HDFC Bank had its own share of news flow. ICICI Bank, without the news flow, also I think has done reasonably well.
Yeah, Gurmeet was talking about Poonawalla. There were some 20 lakh shares worth of block deal which have just happened in Poonawalla. In fact, we saw some blocks as well where the previous MD had liquidated some of the shareholding out there. Gurmeet, you study this name. What are your thoughts now on the valuation and the way things may, some more supply possible here?
There could be a little bit more in the short term, but I think the bulk of the overhang is done with a large block, as you said, of 25 lakh shares coming a couple of weeks back. I think Arvind Kapil, the new MD, has a very good reputation, ex-HDFC guy. We have some very prominent names in the new board as well, and it's backed by a very strong promoter. They have now a AAA rating. So I always say that the cost of funds is your biggest edge when you are the NBFC. I think Poonawalla cost of funds is almost same as Bajaj Finance right now. This tells you that how well they are positioned. The other thing is that you got to be a little lesser aggressive. I think in credit, if you are less aggressive, that holds out in the long run. I think you need a controlled aggression, as we say in cricket terms in NBFCs. Don't get carried away by 40-50% growth quarter on quarter. In fact, that to me is a red flag. We've seen that in DHFL, we've seen that in Yes Bank. And I don't want to get name specific, but controlled aggression, controlled risk-adjusted growth is what matters. So far, I think it ticks those boxes. Let's see, it's still early days for them. We got lucky when they took over Magna FinCorp and we entered when the price was more like 140, 150. So we have still a lot of cushion in terms of what the price is right now, but looks to be a good franchise. If I were to name top 3, 4, 5 NBFCs in terms of credit quality and future growth, I think it should figure in that list.
Okay. But controlled aggression, that's the word coming in. Thanks, Gurmeet, for putting that into perspective. And thanks so much for joining us today. Naresh, Kunal, we'll let you go as well.
If you like this video, then like, share and subscribe to ET Now.